Hey guys, Sam back with you here, Thursday, January 11th. We're getting into midday. Had another member interested in a look at Florin. I was not familiar with this coin. Been around for a while. Florin, the symbol is FLO. Here it is to Bitcoin. I've got it on the I've got a 12-hour here because it's been around for 4 years. But here's as far back as we can go on Bittrex. So here we're back to 2015. So, I mean, here's the classic, we see it all the time. There's the first pump, and then it's all given back. So we're just right back to this base level here. And it looks like we've now got a pivot that we can work from as potentially, we're starting something to get out of this hole. And we've got a new trend starting. If we buzz over here to CoinGecko, you can see this is a little bit of a red flag that we're, 4 years from the Genesis date, and we've only got 40% on the score here. It would give me some pause as to whether or not I'd want to be long-term here. I would like to see a little more action there. The market cap, 43 million. That's not great for a coin that's been around this long. But, again, a member's interested. Want to see if there's anything technical there that we can glean from it or anything that we can learn that would be helpful if someone's trading this coin. So you can see about 50% of it's on Bittrex. The rest is on Polo. So I've got it. Where do I put it? So I've got it here. This is on Bittrex, right? So again, I just wanted to show you that the pump and dump cycle that so classic of crypto. So let's go down now that we've got a good pivot that we can work from. Let's see if there's anything here happening. So this kind of starts to take some shape here. So we can see maybe some things happening here. So this is kind of interesting. So I'm gonna take that off since it's kind of wonky. Okay, so let's see if we can get an initial count on this. Well, working from my low here, that certainly looks like a reasonable, 3, 4, up for a 5. So that looks like we've got. Let me lower the degree there. So it looks like we've got a reasonable one wave in there. So, I mean, nothing terribly askew. That may end up actually being there. So we've got a good one wave in place. Right, so there's our one. Then here's the tip. That, as I've often shown, that first reaction is often the A wave, and then we look for a little more complexity, and you can see we end up with the, this is what we're seeing, in crypto is these shallow C waves. So we get the correction here. We get some complexity in it. We get our A wave. We get and here's our B, and then down we go for the C. So we get the classic triangle pattern, which is less common. That's not what I want to do. It's less common in a second wave, but there it is. So it's more commonly found in a fourth. But here's that classic pattern that we're seeing in crypto, and we have been, and likely to continue until something else starts to take shape. So there's the triangle pattern that takes us out of this. So up we go. Now we get a little. Well, it's kind of a false break. So, but we complete the one. So if we just kind of working backwards, okay, I've got a 1, right? So that's potentially my 2. So could that be my 3? Well, maybe. So that's positive for getting back to some of those prior highs. So at least we've got a wave count here that makes sense that we can start to work from. So let me lower that degree so we can get a handle on this. Okay. All right, that reasonable count. Got a 1, 2. This looks like I've got my 2 here, and then I get again another 1, 2. This is what it appears to me. So checking this just to see, are we valid? Does this make sense? If that's my 1, well, here's my A wave. We get through the 50, don't make the 618, and then my C to 50 to the tick. All right, so that gives me confidence that my 1 ABC2 seems likely, right? So statistically, we've got good probability. So let me change this degree here again, just so it makes sense, and we'll go up a degree. So we go to minuet. Okay, interesting. Okay, so if this is my 3rd, we don't know that it's completed, but we're putting in some sort of impulsive wave here. So anticipating subdivision there. So working from this perfect wick here on the 50, then I get another 1, 2. Now this could be 3, 4, 5. Well, it remains to be seen. We're going to measure it, see if that makes sense. But take note here. Look at this. So from the tick here at the 50 to the algo target, boom, there's the reaction. So they took profit. And that we've got one little kicker here. Now, it remains to be seen as to we can't quite be definitive yet because we got a couple of different scenarios here. So let's change that degree and go down again. So we can look at this and say, okay, and this is where it gets tricky, and you know, this is, if you're going to be an Elliott trader, this is the work you've got to do. So if this is my one wave, all right, let's consider that as my one. I get a beautiful ABC. There's traditional, right? So we get non-traditional, shallow C, truncated C here. I get a very traditional ABC here with the C being lower than the A. That's perfect. Looks like that's fairly deep. So my guess is we got, if this is here, went to the 786. So there's our 786, even wicked a little through it. But I got a nice ABC, and then boom, up we go. And you can see here's the negative 100. Here's the first target. So that they screamed right past that. So algo's likely working from this. They get their target here, retrace. Now they're going up here. Well, let's take a look in here. So this is open to some interpretation, because what I see here is I see very nice subdivision to suggest that we may not be done yet. So let's look here. So if this is my 1, 2, well, so one scenario is that this is my third. And then I've got subdivision within that. So if I open that up a little bit more, we can see that subdivision. So that's what we're looking for to help us qualify that this is a good third. So within that, I can look here and see, well, there's a nice little 1, 2, 3, 4, 5 to give me the subdivision that I want to see in my third wave, to confirm it to make me more confident in what I'm seeing there. Okay, well, let's measure that. So let's look at this. So let's look for the statistical probability zones. If this is my 1 and that's my 2, let me pull this over so you can see it. Well, look what I get here. So this gives me, this makes me look at that and go, okay, well, that's an extreme for a 3. We get to the 2618. That's a perfect 3. You know, if you want to get a 3, that's what you're hoping for, is to get the 2618. And then along the way, I get this nice subdivision. So this tells me that relative to this 1, 2 in green, I've likely got my third in here, and I'm in the process of putting in my fourth. Now, what matters to me? If that's my third, I definitely don't want to overlap my 1 here. I want it to stay impulsive. I've got this nice subdivision here. That doesn't disqualify. We stay. We've got a motive wave. So we've got an impulsive structure here to complete a third. Now, this gets a little funky here. So we'll see. Maybe that's just the A wave. Let's take a look. Let's do some measuring. What the odds are that that's my third? Well, again, I'm going to do the exact same thing. I'm going to measure here from my 1, projected from my 2. Here's the high probability zone. I get right to the 200%. So here's what I'd be looking for to qualify it. Here we get to the 1618 to the tick reaction. Then we come back up. We end up getting the 2. Okay, we pull it off. Does that make sense? Would that play as a 2 and this as a 3? Well, here's the 38. Up we go, 2 and through the 23. We don't quite make the negative 618, but it certainly qualifies here with this as my potential fourth. So whoops. So let's pull this off. And say, okay, if this is my 1, 2, this all looks very technical. It's all qualified. Perfect Elliott trading. Let's go get my fib tool. I'm going to pull from my 2 low here up to my 3 high. I'm fairly confident I've got a good 3 high. Where's the first place we go? To the 50. And in fact, we'd wick it again. So are we done here? Well, hard to say. Hard to say. Let's look down at the oscillator. Well, this would imply that this is my third, so that makes me think that this, so note here. So this looks like it's the third, fourth, and fifth to complete the third. All right, I get a little divergence now here. So this is kind of interesting. So I get divergence with the RSI. So note this. So I've got divergence from the RSI here relative to that price here. So I've got this here. So divergence, right, between here and here. It's not as strong there, thus the sell-off. But interestingly, I don't get divergence here with this oscillator. So that's where you're getting mixed signals. So that's kind of the trade-off you make with oscillators, that often you will get mixed signals. So that's why I use them. I go there last rather than first. So but what I do take from the Elliott oscillator here is that this is likely my third, as I've got the strongest wave here. So that even though I don't have the divergence here, I do have it here to give me my 3, 4, 5. So let's pull that off and keep working through that. Well, is that the 4? Could be. Could be. This was relatively more structured, and I had good ABC. So that could be. It may be that that's all we're going to get there. That's a little, it may be that that's just where we're headed, and we're going to complete the third there. That makes sense. Remember, we're trying to complete the third relative to this 1, 2. Okay, so if we measure that and we look at what we're looking for here, remember our statistically high probability zone for the third, well, we at least got to get 100%, right? We know that. What we're looking for is this up here. We're looking for the 1618175. Whoops. We're looking for that zone right here. So look how that gives me a little bit of confluence with my negative 618. So that's kind of interesting. So this is where I want to see my third relative to this 1, 2. Right, projecting up. That's the third I'm looking for. So that's my hot box. So I'll leave my third there knowing that that's my target that I'm after and that I would be looking for this to get there. So how's it going to get there? Is this the 4 going up for the 5? Well, that could be. There's my negative 618 algo target. Could be. But it's likely to not just go straight. It's likely going to get that same subdivision that we've seen here. Because this, pretty vertical move, but you had all the nice subdivision you'd anticipate. So I'm anticipating here that if I'm going to go up there, I'm going to do it something like that. So if I put the wave on that, you get the idea. So come on, that's what I'm anticipating if my 4 is in. If it's in, I got to get there with some degree of subdivision here, most likely. So I don't just go straight, but I may see something like we saw here, which is a very nice move. Now, how do we know? So that you don't know. That's the reality. You don't know. We wish that it were that easy. So how do we know? Well, if we're going to come out of this and we're not going to do an ABC. So if the 4 is in, if we work off of that assumption, we need to see a 5-wave subdivision to confirm that we've got a 1-wave. That's how you qualify it. Otherwise, if we see a 3-wave, because the alternative is that we've just got this. And then we come back down here. So how are you possibly going to know? The only way that you can know, and this is the reason that I advocate using Elliott wave, the only way you can qualify and know is this pivot good, right? So remember, if you don't want to use Elliott wave, you just say, screw that stuff. I just buy the 50. Here's my target. Good. If I get the negative 618, great. But if you're going to use Elliott wave, we can be more precise about that, because if I get a 3-wave here into the B and then I roll over and come back down, well, then I know I've got an ABC going in, and now I'm looking for my 4th. When do I know that so I got to move this over. So now from here, if I get that, now, yet again, I'm looking for that 5-wave structure in my first, whether I get it here and then I retrace for a 2 and then go up again. So you don't know until you see how it plays. Do I get a 3-wave here and then roll over, or do I get a 5-wave telling me that as abrupt as this is, that's enough for my 4? It's not the prettiest correction. I guess if I went down to a 15-minute, I might take a closer look at that. Yeah, but remember, you're looking for subdivision within the ABC as well. So if I look at that's very well could be a 1, 2, 3, 4, 5, which would suggest a wave. So maybe we get a zigzag. Maybe we get a 5, 3, 5. But that looks more to me. Again, you don't know. It could be that you get an ABC. That's possible, that we've got enough subdivision there. So again, you aren't going to know until you see how it comes out of that low, and if it comes out of that low. So I've got good technical confirmation here with a reaction at the 50. So potentially algo buying, potentially. But we can't confirm it until we see what kind of structure comes out of it. Right? I'm hoping that makes sense. So do I get 5 waves or do I get 3? So if I get 5 waves, then I'm buying the first pullback, because I know probability is that I've got my 1 in, I'm buying the 2, looking for the third of the third. You see that? So my 5th, now all of this goes up higher. Right? So this would be up here. Well, this would be up here. So that's what I'm trying to get. So so take note here now. I'm in the 1, 2, so I'm trying to put in the third here in white. Within that third, I've got a 1, 2, 3, 4. So I'd be looking to put in the 5th here in green of the third. See it? And then if I can get in here, right here, I'm in the third of the 5th of the third. Right? I know it's tricky when you're first learning it, but it's that fractal nature of Elliott wave that is its power, because it allows us to trade with more precision. Because if I get a 5-wave structure here, I'm looking for the 50 to the 618 for my entry, knowing that if it takes it out, I gotta rethink the entire trade. That maybe the 4 ends up going down here. Now I'm looking for the exact same thing over here. Still looking to complete the 5-wave structure because I'm fairly confident I've got a good 1, 2. 1, 2, 3 within my third because because I worked back through it and qualified those pivots. So probability says I've got a good third here. Just that, not certainty, just probability. So do I have an A wave? Again, we won't know until we see how it reacts. And then it's just a probabilities game. Do I have a 2? Am I getting the third? Do I get a new? Do I have a? So what is that? Just in traditional charting, I would have a higher low. A break of this gives me a higher high. Now, well, okay, great. So I've got a trending market. Well, so where am I likely to go? How do I qualify the third? Well, I know I'm going to look for 100% the length of the 1. And then just as I did here when I measured this, I'm going to look for the 1618 relative to the 1. And then if I get that or something in that area and I start to retrace again, I'm looking for the 4. And I'm looking for the 4 somewhere between the 38 and the 50. And I don't want it to overlap the 1. Even though it's a 5th, so I could get a diagonal. It happens. Could see it. But I'm in a 5th of the third. Right? I know it's... When you're first learning it, it's a little confusing, but the more you do it, the more it makes sense because it's just these recurring patterns. It's fear and greed. It's optimism, pessimism. That's what creates the structure of the 5 waves. It's not voodoo. It's just human emotion. Fear and greed, optimism, pessimism. That's what creates the wave structure. That was Elliott's great discovery, is that these were patterns that repeated based on human emotion, not just because some computer's doing it. Back when he was trading, they did everything by hand. Okay, guys, I'll wrap it there. Hope that makes sense.